Hello everyone, my name is Dabiruddin Syed and today I'll be presenting my comparative financial analysis comparing two companies, Amazon and Alphabet, which is otherwise called as Google. Both are major technology companies with different business models. Amazon focuses on e-commerce and cloud infrastructure, while Alphabet leads in digital advertising and AI driven services and also have Google Cloud services. The goal is to determine which stock offers the best investment opportunity based on 5 years of financial performance, and I'll also take a look as to which stock is better for the retail investors such as individuals of the United States of America. Let's look at the contents or agenda of the presentation. I'll start with the purpose and the scope of analysis and the financial tools and methods that I have used in my project and presentation. Then I'll compare both companies or stocks across liquidity, asset management, debt management, and profitability. After that, I'll discuss strategy and industry factors and finish with my investment recommendations supported by financial evidence of the last 5 years. To introduce, Amazon and Alphabet are leaders in the technology sector but pursue different strategies. Amazon emphasizes growth through logistics and cloud computing, while Alphabet focuses on high margin digital advertising and AI innovation. This analysis compares their financial health and growth trends to support an informed investment decision based on risk and return. Let's look at the analytical tools that I have used in my project. I use liquidity ratios to assess the short-term strength or the short-term financial strength, asset turnover to evaluate operational efficiency, debt to equity ratios to measure financial risk, and net profit margins to assess profitability. These tools and methods provide a consistent framework to compare the financial health of both the companies as stocks. In addition to the ratios, I examined the 5 year trends to see how performance evaluated or evolved over time. I also compared both companies to industry benchmarks and peers in the technology sector. This helped link financial outcomes to business strategy, investment decisions, market condition, and operational efficiency. Alphabet shows significantly higher liquidity than Amazon, reflecting strong cash reserves and conservative financial management. And Amazon's liquidity has improved steadily over time as cash flow strengthened, but it remains lower due to heavy reinvestment in the growth and scaling of the future expansions of the company. Higher liquidity gives Alphabet greater flexibility during economic uncertainty. Let's look at the asset management analysis. Amazon has higher asset turnover because its e-commerce and AWS operations generate large and huge revenues from physical and digital assets, whereas Alphabet's asset turnover is lower because of its value is tied to the intellectual property and intangible assets. These differences reflect how each business model converts assets into revenue. Now let's look into the debt management analysis. Amazon shows higher leverage levels and it has leverage because of the finance logistics that is involved with the Amazon operations and the cloud expansion that it has. It supports growth but increases the financial risk of Amazon as a company and a stock. And Alphabet maintains a conservative debt profile and relies more on internal cash flows. Lower leverage provides Alphabet or Google with greater financial stability during market turndowns. Now let's look at the profitability analysis. Alphabet reports much higher net profit margin driven by high margin advertising revenue, and Amazon's margin are lower due to its low margin retail business. Although AWS improves the overall profitability of Amazon as a company and a stock, higher profitability strengthens Alphabet's valuation and appeals to risk averse investors. Looking at the market value perspective, Alphabet is valued for stability and consistent cash flows, making it attractive for long-term investors seeking steady returns, whereas Amazon is valued for growth potential, with investors pricing in future expansion in cloud computing and e-commerce. In the valuation, market valuations reflect these different risk return profiles. Now, if we compare in terms of trend and peer analysis between the Amazon and Alphabet, Alphabet shows steady growth in profits over time, outperforming many peers in profitability, whereas Amazon shows strong revenue growth and expanding cloud services, outperforming peers in growth metrics, whereas both companies are leaders, but Alphabet excels in profitability while Amazon excels in expansion. Now let's look at the strategic plans of expansion. Amazon continues to invest in AWS, scale it, and invest in logistics, AI, and entertainment to support long-term growth, whereas Alphabet focuses on AI innovation, cloud services, and autonomous driving technology. Both strategies, they position the companies for future growth, but Alphabet's diversification supports stable profitability. Now, looking at the industry factors, the technology sector benefits from growth in cloud computing, digital advertising, and AI adoption. E-commerce expansion supports Amazon while digital marketing growth supports Alphabet. However, competition and regulatory pressure impact both the firm's operations and profitability. Now, coming to the most awaited slide, this is the investment recommendation from me for the long-term investors, for the retail investors who are individuals like you and me in the United States. Based on the analysis of the last 5 years of financial years, Alphabet or Google is recommended for investors seeking stable returns with lower financial risk appetite. Amazon is better suited for growth oriented investors who are willing to accept higher risk for higher potential returns in the future. But nonetheless, a diversified investment approach can balance growth and stability. But if you have low risk appetite, then Alphabet is the stock to go. Looking at the financials, Alphabet's stronger profitability, lower leverage, and higher liquidity supports its selection as the preferred investment choice or recommendation from my end. And I would personally invest in Alphabet because of these factors that I have worked upon. Whereas Amazon's strong revenue growth and cloud leadership offer high upside, but it comes with higher financial risk due to leverage and lower margins. And right now at the stage of my life, I would not want to take such risks. That's why I would keep Amazon stock at bay for now, but maybe in the future I would be investing on Amazon because it has high scale potential. These financial differences justify the recommended investment mix. However, final recommendation is you need to maintain a diversified portfolio so that you can benefit in any time. Even if it is hard time for one sector, you could benefit from the stocks that you have invested in the other sectors as well. So I'd like to conclude saying that Alphabet offers stability and strong profitability, making it a safer long-term investment, and Amazon offers higher growth potential driven by cloud computing, e-commerce expansion, but carries higher risk. The final choice depends on the investor's risk tolerance and investment objectives. These are the references that I have taken from the international conferences and high impact journal papers, and also from the industry studies that support the financial data, trend analysis, and strategic insights used throughout this project and this presentation. I would like to thank for this opportunity. Thank you, take care, and bye bye.